So now we are recognizing or recording the labor cost. So similarly, labor cost also, we have direct labor and indirect labor. So direct labor is going to be applied on raw material? No, because raw material we just purchase and we send it to factory for conversion into finished goods. So during that conversion, direct labor is going to be applied over there, right? So that's why from labor, cost, which is salaries and wages payable account. So those salaries are going to be adjusted, means going to be recorded on, again, work in progress and manufacturing overhead, right? Indirect labor is going to the manufacturing overhead. Direct labor is going to the work in progress, because we are converting raw material. When we are converting raw material, then raw material cost is over there in work in progress, plus the labor cost is over there. So entry would be the, since salaries and wages payable, right? Those workers work for us for the whole month, and we have to pay them. So it means, recall your, the concept of accrued liabilities, or sorry, accrued expenses. Expense occurred but not paid. When not paid, it means we have to pay if we create liability. So these are liability that we will pay to our workers their salaries. But against what? Against inventory. Because that cost that we, that labor cost is going to be applied on work in progress, that increases the value of inventory, right? So we apply some labor on the raw material to convert into finished goods. That is a part of the product. So that is added to our inventory. So its cost is going to be increased. So work in progress increase belongs to asset increase, debit, right? Part of, salaries that we cannot trace, like watch guard salaries, supervisor salaries, right? They are manufacturing overhead because we cannot trace easily. So that also increases our manufacturing overhead. Since the nature of the salaries and wages payable are liabilities, so we charges it to liability, right? Because we didn't pay yet, we will pay later. So increase in liability, credit. Increase in asset, work in progress, debit. Increase in expenses, debit. So entry would be work in progress, manufacturing overhead to salaries and wages payable, right? Because this is accrued expenses. We don't pay salaries in advance. We pay after expense occurred, which is accrued expenses. Guys, I need your participation. Arone, Min, Chandra, Christine. Understand?
Yes.
Yes.
Okay. Let's move forward. And now there comes the other expenses. So other expenses, and remember, these are actual one, right? Because applied, so without converting raw material into finished goods, we assume or we calculate or anticipate in advance the manufacturing overhead. So that's why we write it down on the credit side. And when we are, converting those raw material into finished goods, then we are having actual numbers, right? So see others, for example, taxes, property taxes, and all the stuff. Remember, we will pay those, manufacturing overhead later. If we pay right now, then there would be a cash here, manufacturing expenses to cash. So normally we don't pay, we pay later, because the order, maybe we confirm the order in 2 days, and tax is going to be paid in after a 1 month or after 3 months or after a year. So we accumulate those taxes and save it to our bank account, and then we at the end of the period, we have some specific windows. The government gave us, okay, all the factories, they are required to pay their taxes during this period. and then you pay the taxes over there. Until then, this is your liability, right? Your insurance and all those stuff, right? So all those expenses, we also charge it to per order as well. Okay, this much is sales. On this sales, this much is the tax. So you cut the tax and save it in a separate account, or maybe the account you just record that, okay, this much belongs to taxes. So that's why we create payables. Payables are our liability. Liability increase, credit, right? So expense increase, which is manufacturing overhead, debit, to liability increase, all kind of expenses that we will be paid later, right? Here. Or if we are paying directly, so we just say that, okay, manufacturing overhead to cash that we actually paid. That's it. Cash decrease, expense increase. Cash decrease is basically asset decrease credit, expense increase debit. So here cash can also be used here, right? If you are paying right now all other kind of stuff. For example, uh, you know, mm, uh, you hire, a software engineer for this particular order, right? Because you need to some kind of like some changes in the program or something for this particular order, and you paid him the salary. Manufacturing overhead for this, because this is, for specific for this one, and it is hard to trace why, because you are making thousands of products and thousands of order, and you just paid for 3 months you updated your software something. So you just say that, okay, for 3 months salary you paid, and that would be added to your product as well. So this product, for example, you said that, okay, indirect labor in the form of payment to the software software developer, and you said manufacturing overhead to cash. That's it. Because you cannot find out that how much, the work of the software personnel is going to be, affecting our this order. It's hard to find out, right? So that's why you just say manufacturing overhead to salaries payable, and then salaries payable to cash, entry closed, right? Okay, we just finished talking about the entries, so now let's just talk about its. Okay, why it is repeating again? Okay, yeah, right, we just talked about this. Okay, now the class participation, we were doing this class participation, right? So let's just talk about this now. Okay, let's do it together. Brother, I just pronounce it, we both, do that. Number one, the first of all, the illustration. The Polaris company uses a job order costing system. The following data are related to October, the first month of the company's fiscal year. So first, raw material purchase on account. What would be the entry? Raw material purchase on account. Inventory increase. Did we pay cash? No, we get it liability. Liability increase. So liability is accounts payable, which is supplier, and asset is raw material inventory. So raw material inventory increase. On the other hand, the liability also increase, right? Asset increase, liability increase. Entry would be debit to credit. Raw material to accounts payable, 210,000. Right, Chandra? Understand? Christine, Min, Arone?
Yeah.
Yes.
Good. Second one, raw material issued to production, which means from this raw material, right, material is, going out to the production facility, which means it's going to be used in work in progress, direct material, and indirect material as manufacturing overhead. As manufacturing overhead. So raw material issued, which means raw material is decreasing, right? What is increasing? The direct material, which is work in progress. So entry would be work in progress. This is our expense. Expense is increasing, work in progress is increasing. Expense increase, debit, because work in progress increase, work in progress inventory is our asset is increasing, debit. So work in progress, and then expense increase in debit. So work in progress, expense, which is manufacturing overhead, to the credit side would be raw material, right? Here we go, let's see that. Understand? Raw material to accounts payable, and then work in progress. Question mentioned 178,000, and then manufacturing overhead 12,000. Here we go, 190,000, right? Chandra, Christine.
Yeah, get it.
And now direct labor cost incurred, which is 90,000 direct labor, indirect labor 110,000, right? So direct cost belongs to work in progress, right? Because we are converting raw material into finished goods. So we apply some labor on the in-process material as well. So that's why work in progress is going to be increased. So work in progress increase mean asset increase mean debit. So work in progress, right? Indirect labor is going to the expense as manufacturing overhead, expense increase, manufacturing overhead. So the total salary is going to be 200,000, right? So total labor cost is going to be 90,000, 110,000. So that would be the salary. But did we pay salary? Question didn't mention that we paid salary. It means we create a payable or liability. So liability increased from 200,000. From that 200,000, 90,000 belongs to work in progress and 110,000 belongs to manufacturing overhead. Entry would be work in progress, manufacturing overhead to salaries and wages payable, right? And now depreciation recorded on factory equipment. So whenever we create depreciation, we create